So that's a formation which is important. There are many minor formations which also tell the technician something. For example, in TLT, you have a basing formation. If you look at this, there's a very good technician or market wizard named Richard Wyckoff, who is the specialty of one of my colleagues at Golden Gate, Hank Pruden. Wyckoff said that you could estimate the power of a move by determining the energy that's built up in the base. So in here you have a base building up, and then you have a clear signal here. Whenever you have a power bar across a trend line like that, and then you have a gap and another power bar, you have a very powerful pattern. And what it tells you in this particular case, what we had going here was, well, first of all, we have gaps. There are three kinds of gaps. There are breakaway gaps, there are runaway gaps, and there are exhaustion gaps. So we have gaps here, and we also have what technicians call a flag. So we have a flagpole here, which runs up like this. Then we have a flagpole like this. And the rule of flags is that the flag flies at half mast. So prices should go from here to here, just as they went from here to here. And this is very, very often the case. In this particular case, I missed the gaps in the first place, but I saw the exhaustion gap, and I saw the prices stall here, and I shorted the issue and made a good trade out of it. I mean, I should have made a better trade by getting out in the first place, but it was not a bad trade.
Exhaustion gap, I thought it was an island gap.
An island gap? I'll show you an island gap in a minute.
No, but that's called exhaustion to me also, some other.
Island gaps are interesting also. In this particular case, it's an exhaustion gap. And what tells you that is if you've seen these previous gaps, and you don't always have all the gaps, sometimes you have one or two. It's, there are permutations of the pattern all over the place. But once you recognize it, you say, okay, well, I can certainly buy an option on that. Okay? Or I can sell a put, because when I see this this breakaway right here, that I'm not presently trading options actively, but if I were, that's where I'd sell a naked put, because the market's telling you I'm going higher. Okay, there's Larry Williams, the famous trader, has said every trend starts with an explosion, and you can see the explosion clearly in this case, and it tells you something. It's like all of these formations tell you something, and all you have to do is learn to speak that language to take advantage of them. So we had gaps there, and we have gaps in the euro. Here, well, first of all, a trend line is broken in the euro, and second of all, powering across that trend line is a down gap. There's a down gap here, there's a down gap here, and it's near to being a bear flag. Okay, you can see here's the flagpole, here's the flag, here's the continuation, and you can see that if you take that, whether you're trading options or you're trading the issue itself, you have radically improved the probabilities for your trade. Okay? For some reason I have a lot of flags. This is well, this is indicative. This is how flags occur all the time. Okay, flags occur all the time. These other formations that we'll look at occur all the time too. So if you drew a line across here, you have a strong gap across it. You have a strong gap here. And in this case, you have a breakaway gap and an exhaustion gap. And the way you know that is by the particular configuration here. First of all, you have a reversal day at the top here. You can see what kind of candlestick it is. And then prices stall, saying, okay, this part of the move is over. And there's no doubt about it. Here is another example of a kind of signal. You have a congestion zone, and then you have a power bar powering across a resistance line, or you could call it a horizontal trend line. The violation of a trend line is always of interest. Here is eBay. This was a triangle in eBay. You can't see the left side of it. I don't know why. Probably because of my ineptitude. This line was drawn probably somewhere in here. And this breakout was the breakout in eBay. And it's a triangle. A triangle is once again a powerful formation that gives you information.
So I thought this is a bear, downward flag or bear flag.
No.
No, because in the trend line going down.
No, it's just a triangle. It's
See all of the pattern.
yeah. I'm sorry that got cut off. It would probably be a little easier to see if it hadn't. So we were talking about island gaps. Here is in Morgan Stanley. Let's see. I guess this is October of 2008. October 2008. First of all, it's broken. It's broken its trend lines. It's broken its support lines. And here's a gap, and here's a gap, and then it sells off heavy down to here, and here's a gap, and here's a gap, and we have an island reversal. Okay, and that that's another message saying, easy money buy the issue.
Long here,
What?
so it's an island reversal here at this point. So we think it gets long to the right of the chart from here on.
Yeah, definitely. It went up from there. As you see, what the gap was at 9. What's Morgan Stanley now? Considerably more than that.
Yeah, but the entry, you need the next bar to know that it's in the island. That bar ends at 18.
That's early enough. But if you're very alert and very agile, you could have bought this bar. Okay, this bar is telling you because it opens here, it runs down here, and then in order to flush out the unwashed and the unworthy, as I say, and then it powers back up here, and then it closes down here. I mean, it's a lot of action for one day, but if you were watching that one day, you'd say, okay, this something is going on here, and there's a case where the volume means something to you. You look at the volume, you look at the activity, and you say, okay, especially since if you trade it, there is an absolutely, in this case, an absolutely obvious stop level. And that is, in spite of what I told you about putting stops underneath the bottom, you would put the stop down here, 25 cents, 30 cents, and if it doesn't get tripped, you're on the rocket, right? Okay. So it's entirely possible, and this is not unusual. There were a lot of formations like that in the 08, the 07-08 bear market.
Charles, we're coming up to a break in about,
Excuse me?
about 6-8 minutes.
Yeah, you want to take a break now?
Where was a good point, but we've still got another 5-8 minutes.
Anytime you want to, it's okay with me.
Well, let's go a little bit further. I just wanted to know what the time was.
Okay, well, it's 7:23.
Yes.
You could take a quick look at this. How many of you are familiar with point and figure trading? How many of you use it as your method? You do?
Part of it.
Huh?
Part of it.
Part of it.
Question. Ever use market profiles for trading?
Not really, but that doesn't mean I don't respect it. I think it's an interesting that I've never really explored it, in depth. Although, that's one of those things I hope to do one of these days, is explore it in depth.
Do you think that the point and figure is better to see for you?
Excuse me?
Do you think that the point and figure graph is better to use?
I think that I have seen professional commodity traders make quite a lot of money with point and figure charts. So I think that, and I've also seen them used for forecasting or predicting. Back when the Dow was 11,000, Professor Hank Pruden at Golden Gate went public and published an article that said that the Dow was going to 14,400. And when the Dow got to 14,200, he said he was cashing in his chips and taking his winnings. And that was pretty impressive. That particular use of point figure came from the Wyckoff method, which is a little different from the classical interpretation of the point and figure chart. But I think when you get a strong signal from the point and figure chart and it confirms the analysis of your trend chart, you have a powerful combination. You stretching or you? No, okay. I'm going to talk about this a little bit later, but is there anybody that needs to know about point and figure charting, what the point of point and figure is? You want to know what the point of point and figure is? Well, point and figure basically, let's see, I think somebody said that Charles Dow invented it. I think the Russians did it myself. What you do is you have a reversal size box. These little boxes here all represent whatever your scale is over on the right there. In this case, it's 10 points of the S&P. So you only fill in an A. You fill in X's when the price is going up, zeros when the price is going down, and you fill in 3 boxes when it reverses from one to the other. In other words, right here, you got a 30-point down wave. Okay. Now the thing about this is, well, there are lots of different formations. The thing about this is, it totally ignores time. Okay, so it tells you, as in this case, that you've got a price objective of 2040. You got a price objective of 2040, but it gives you no idea of what kind of grief you're going to suffer on the way to 2040. But I don't want to say that I have ultimate confidence in point and figure charts, but I find looking at them more and more interesting, because there's some powerful stuff that goes on here. What goes on here is, from here to here, you have a powerful base. And when you look at this is what Wyckoff called cause and effect. When you look at a cause like this, a base like this, then you have an effect like this. So it's very interesting, and especially for an options trader. Because for an option trader, you get a way to establish targets. Okay? There's more. I'll go into target establishment a little later here, but this gives the option trader a tool. I think this gives you, it's more of a long-term tool, but I think it can probably be adapted to shorter-term uses. And that's another one of those things I intend to get around to right after I get to market profile.
Renko chart. Renko chart.
Yeah, right. That's another one. That's on my list too here.